one of the biggest things that is close to my heart is really to give back and to help and to give advice where I can. So this podcast really sits very good to my own moral compass.
Particular area that you touched here, the education part, that's not just for the underbanked but more universal, and it plays a crucial role in terms of global adoption.
Just think of security and privacy. This is a very important topic, right? So this is where we talk about GDPR, how we process data and how we control it. So here it's about sensitive data staying protected. I just
UPI in India, UPI becoming the biggest digital transaction payment system in India, biggest in the world. It has reached so much of population that even the biggest concern of reaching the underbanked population has now been eliminated with that. Hi, Jacky.
Hi, Harman. Nice to meet you.
Very nice to meet you as well. Welcome to What Are You Tokenizing? How are you doing today?
I'm doing really well, and I'm so thankful for the opportunity to join your podcast. I am very excited. Thank you.
Amazing. And we are more than excited as well. I've seen your profile, I've seen your experience, and what we have been trying to do. I think it aligns perfectly in that. Without raising the curtains on that, I directly would love to jump into the questions that I've prepared. So what we did is we went through your profile, we went through the different forums that you have been speaking at, and we found out some amazing insights that you have already shared, and we just want to capture them in this conversation so that the students, the business owners, and other clients that we have, they are able to understand and they are able to relate what they can do in tokenization and how they can learn from your experience.
100%. I'm super happy to share that. I've got so many years of mileage, and I'm more than happy to give some insights and then just help where I can. I think one of the biggest things that is close to my heart is really to give back and to help and to give advice where I can. So this podcast really sits very good to my own moral compass.
Amazing. So before starting the podcast, the questions and getting into the details, I would love for you to share a brief intro what you have been doing in the past before joining Web3, and how your journey into Web3 came to be, and what you are doing currently.
100%. So, banker by education, both in my junior and senior career, that was based in South Africa, where I started in retail banking as a young banker inside of the Build the Bank kind of special projects team. Thereafter, organically transitioned into a leadership role inside of corporate and institutional banking for big brands such as Barclays, Investec, and the likes of such. And then thereafter, got an opportunity to relocate to the Netherlands to join the fintech and blockchain space. And then from there onwards, it really has just been an organic progression into crypto as a topic. Super exciting. I really love it. Joined a brokerage firm in Austria, of where I'm still employed, and then took part of the leadership role in the actual infrastructure pieces of tokenization technology and the likes of such. So it really has been all roads has led to this point. Um, I'm not shy to say that all my career experience has turned into a block of Lego blocks, a bag of Lego blocks. So, yeah, happy to jump into that also if you want.
Amazing. And it's not every day we find someone who has organically progressed towards this domain. Most people, they see a big opportunity, they see that okay, this is their chance to make it big, so they shift domains very easily. But very few people have transformed their existing expertise into a Web3 native expertise, and they are the ones that are bridging the gap between Web2 and Web3, which we are seeing now as the biggest, I'll say, industry that's been forming up now, with all the bigger giants coming up. So I'm really excited to ask a lot of good questions and get your insights on that.
Let's do it. I'm excited.
Amazing. So the first one, that Jackie I had in my mind was, I saw you mentioned somewhere about having custom blockchains, right? There is always this question that enterprises initially started with building their own private blockchain infrastructure, being on Hyperledger, Corda, and all those blockchains before, Then they shifted to public blockchains. It didn't work as well. They had to face a lot of issues. Public blockchains were good for other companies, but not for enterprises. So what is this new trend that's coming up? Why do industries need to adopt custom built blockchains rather than public blockchains? What's the pros and cons of that?
Yes. So if we think of building, custom blockchains versus building on top of a public blockchain, there's a couple of things that springs to mind, and they are super important ones, right? It really is and governance, or control over governance. You have your privacy and your security aspects. It's really super important, right? Those that you cannot ignore. Then you're getting into the performance optimization topic. You talk about predictability in the costs, and then we speak about regulatory alignment, which triages all of the components of the above. So if I could just go a little bit deeper into the entire control over governance piece. When you want to take control of the governance, what you're looking at is, as a company, you decide the rules. Especially in tokenization, you decide the participants, how the networks will evolve. You're in full control of that, and there is no outside influence on that actual blockchain itself. Thereafter, if I just think of security and privacy, this is a very important topic, right? So this is where we talk about GDPR, how we process data and how we control it. So here it's about sensitive data staying protected, with limited access to that actual data. Whoever gets to use that data has to have a strict authorization model behind it. So that is where I sort of lean towards in that topic. And then once I start looking at performance optimization, you want to be able to scale this business. You want to be able to, get into a topic of speed. You want to talk about, I don't want to compete for traffic. So if you're on a public blockchain, there's always traffic competition. As it comes in, you are in some queue with regards to, I don't know, if it's a settlement topic or whatever that is. And then regulatory alignment. Um, you can literally design your own blockchain to be as regulatory compliant as it should be. And that way, you give jurisdictional satisfaction to your own local authority, and you also go into a whole full visibility mode as well. And this is really important, because what you want to do, and you'll hear me say this often, you want to give your retail customer or your investor, you want to bring truth as close to ownership. So you want to give them that transparency. And for me, I feel that if you build your own blockchain versus going into the public blockchain, you just have a lot more control around that particular topic itself.
That's an interesting take. I've known about other factors like performance and scalability, but the regulation aspect is something that really makes one wonder that if you build your own blockchain, you can better fit into maybe a sandbox environment that's available, maybe a regulatory approval process becomes easier, and then the innovation doesn't stop, right? You
Definitely not.
can go ahead with that. I think that's the main reason why we are seeing so many of custom blockchains based on different use cases, like someone building a blockchain for tokenization, someone building a blockchain only for stable coins, like that.
Yeah, and I think it's interesting, right? Um, I would lean towards a dual strategy. That's what I would lean towards. So I don't know if my consulting expertise, or if I had to put together a solution for you or talk to you about how to build the blockchain, would include to do a logical segregation of it. I don't think I would go down that route. My route would be, let's look at how you create a dual blockchain, a blockchain that can facilitate your entire business, especially if we speak about institutional banks, because those are going to be the biggest adopters, right? And that's where the biggest disruption will take place. And then funds, and then we get to government and all of that. But that's what I would look at. Like, how do I build this blockchain in order to facilitate many a product, of which the tokenization topic will sit obviously on top of that. So that's how I would reduce the parity between the two, Web 2 and 3. That's how I bring it all together in a
Amazing. That,
very
that that actually makes
short.
a lot of sense, because what I've seen, like I've been seeing a lot of use cases in governments, in enterprises that are deploying their private instances of a private blockchain like Appalachia Fabric, and eventually it becomes a custom blockchain only. They're just using a stack that's already available, deploying their own instance about it, right? They can do it for the public blockchain as well. That's what people have been now doing. building layer ones with Avalanche, with Polkadot, with Cosmos, and with Ethereum POS as well. But not to get too technical, I tend to do that a lot. I have a bit of technical background, so that's why there's a bug in me that keeps on getting there. But so you touched on a very good point in this whole conversation till now, that tokenization, in fact, with different enterprises now tokenizing their own assets, they are eventually going to need such customs blockchain as well, right?
Yeah.
Before going to that, colliding world, before going to that amazing synergy, I would like to ask, what exactly is asset tokenization, and why is it such a game changer in the financial market specifically?
Yeah, I like that question. It's a good one. I get asked it often, right? We get so asset tokenization is what it says it is. It's taking a real world asset that is off chain, tokenizing it or breaking it out down into smaller ownerships into a token, and then you put it on chain. That means you take something that exists with with a physical presence, like a building, a carbon stock or a bond, and you actually make it accessible to the mass market. So that's what that looks like. Um, why for me it is a game changer really is that you're breaking down barriers to entry, stuff that's really things that's becoming really important, and you hear this in the market all the time, is wealth creation. We are creating more millionaires now than we ever have, and this is the best opportunity to look at how do I, as a layman, be part of a big industrial revolution in the sense of I want to own part of that commercial property. I'll never have the liquidity to go and buy the commercial property, but I can own X percentage of it. I can earn a dividend on it. I know that I'm earning on it, and this is what I own on it. And I can have many of that sets of ownerships, right? And that's the retail play. And then if I think of institutional play of it, first of all, I can do the liquidity provisioning and funding of it through a retail market. I have to have less capital injection from an actual, bank. Therefore, my running cost is lower. My working capital is more. So those are good examples of what a real world asset tokenization topic would look like. Um, that's how I would explain world asset tokenization in a nutshell.
Amazing, and I love how directed it is. It's just covering the exact detail of what tokenization of assets is, and as you mentioned, the physical asset being brought on chain. But then there is a separate class of asset that's already existing on chain that we call as a digital asset. So
Yeah.
how do you differentiate between a digital asset and a tokenized asset?
Nice question. Tokenized asset is part of the old economy. It's got a physical counterpart to it. So, what does that mean? It means there's brick and mortar. It means that it's a painting. You can physically touch it in some instances. Um, and it's not part of any blockchain or any technology at present prior to being tokenized. A digital native asset is born on chain. So, what does that mean, right? It's born on the blockchain. And in layman's terms, if we have to be very basic about it, it's Bitcoin, it's ETH, Solana, and whichever other cryptocurrency you want to talk about, because they are native digitally assets born on the blockchain versus born off the blockchain. What makes them close to each other and what's going to make them the machine that drives the new economy together is that the one bridges the old world or the old economy to the new economy. That's the tokenized asset, and then the second part will bring that new economy into the Web3 economy, and that is how they will all live together in the perfect world once we have regulation, some adoption, some education. Because once you start understanding that we are moving away from fiat into digital currency is going to enable you to do certain things with it, i.e., buy some stuff. Then that is how we transition. I'll give you a good example of it, right? If you think of Facebook at the moment, Facebook was built on Web 2. Okay. It's a massive universe. So what does Mark Zuckerberg do? He sees an opportunity. He's going to build a metaverse, right? So therefore, we're not going to be able to just chat to each other any longer and send each other messages. No. At some point, we are actually going to have dialogue like this with one another through our avatars. It is exactly the same concept. It just leans itself towards a financial environment, financial industry. That's how I see it. That's just if I had to break it down in bite-sized pieces, that's how I would go about it.
Amazing. No, no, definitely. So, while you were saying this, it gave me so much clarity that I could see my Instagram profile as a digital asset, right? It's not a tokenized asset, it's a digital asset. It's born out of a digital world, out of my digital footprint. And if I have, right now, I cannot call it as a digital asset because it's not liquid, it's not tradable. But if it's on blockchain, if it has that access, then it becomes a proper digital asset that can be differentiated, right?
100%, 100%. And I can see it that way too. It's because our minds meet on the topic. So I totally get it.
Amazing. But I really like the point of the old economy versus the new economy. I'll get back to you on that part as well. I have a question related to that. But in the meantime, while we're on the topic of assets, what are some real world use cases that you have seen are really picking up? What are the uh, you know tokenization use cases that are gaining the maximum traction right now?
There are a few. I'll tell you which ones I feel is the ones that's taking center stage at the moment. Um, I'm going to use three geographies, right? Let's talk about Europe, Dubai, and Africa. Those are the ones that interests me the most. Europe, because of the tight regulations, we see this with the MiCA. But here you have firms like Franklin Templeton, and Societe Generale that are actively issuing regulated tokenized securities. And they're making this available through frameworks like MiFID and MiCA. Then in Dubai, you have, and you see this all the time, um, real estate tokenization is just something else there at the moment. They are opening up their real estate infrastructure to fractionalized ownership models. You can go in and for as little as 150 US dollars, you can actually get onto the property market inside of Dubai. And that is definitely obviously now, managed under the VARA regulations. But once you get into the African space, and this is why I want to introduce Africa into the topic itself, yeah, we are not talking about overregulation. We are actually talking about underregulation. And this is where I find their credit market will be the next big tokenization topic. Retail credit is a big topic in emerging markets to begin with. So if you think of Africa, it's got a tremendous amount of people. Retail credit and remittances is a daily occurrence. So how do you make that available? So I feel for me, for Africa is a very exciting one because retail credit and remittances, if you tokenize those, if you'll be able to make credit available to a human being via a token, then that eliminates that entire, fiat process that sits in branch in bank, but you take it into a digital space and you make accessibility a lot easier. So those are the ones I'm focusing on at the moment.
No, definitely. I'll tell you one thing. Because of this podcast, I got to have so much of insights from different industry experts like yourself that now I can relate to what's happening around the world, where you are seeing this world moving towards. For example, the private credit market is on my radar as well as the biggest tokenization use case right now. In fact, when I read on LinkedIn the other day, a couple days back, there was this article on LinkedIn that in India, 18% loan drop is there for all the banks in India. Like it's a drop of 18% for them. It's a big drop for them, right? People are not taking loans, and how are they managing private credit? That's how it's happening. It's having
100%.
lower interest rate, more trust is being built up now, and that system has failed again and again in the history of human civilization. But now with blockchain, it becomes a much more efficient system that we can do.
Exactly. And I give you an example, Haman. If you think of financial institutions at the moment, if we just think of them in their tradition, right? So they're sitting with three issues. The first one is people want to do more with their money, okay? The entire financial education around how we manage money has really evolved. We have ChatGPT, we have YouTube, we have influencers, we have Twitter. These are all financial universities at the moment, really, if you think about it. So banks need to offer products that can provide their customers more diversification, and I want to do more with my funds. The second issue that they're sitting with is that you have crypto brokerages springing up everywhere. Okay, they are also part of the conversation, right? They have the ability to apply for a financial license, they have the ability to build technology, and they have the ability to provide product, of which a real world asset token could be, a real world asset investment could be one. So therefore, deposits are leaving the bank. So my salary gets paid into the bank. The first thing I do with my salary is I pull it out of the bank into the broker. Money doesn't come back into the bank, right? There, the asset value goes down immediately. And then the third issue that they have at the moment is their retail credit. It's becoming obsolete in the sense that, again, you have neobanks like Revolut coming up as an example with fantastic digital asset retail credit offerings. They are definitely reading the market right. So again, why would I go to a traditional bank if I can just go to a digital bank that can take me into the new economy, and I can just do everything with my cryptocurrencies or with the local CBDC or whatever that looks like? Because I don't really have to be a part of the traditional bank any longer. They're expensive. So those are very interesting ones, and those are interesting topics because I see those. That's really where the evolution and the friction is sitting at the moment.
Absolutely, and as you rightly mentioned, when you think about these banks trying to kick into the wave of tokenization with stable coins, that's where yield-bearing coins are going to take over, no matter what they do, right? And because it becomes an exit layer for people to earn rather than depending on the banks, as you rightly mentioned. So, but so. While this seems so clear and the technology is here, the adoption is going on, and awareness has increased, but there is still a lot of challenges that stop tokenization to become mainstream. And I'm hinting toward a word that you have used a lot in this conversation. What are the regulatory challenges that are stopping tokenization today?
There are few. If we think of, so tokenization is not wildly, or there's not a wide regulation at present on the actual topic of tokenization itself. Um, Banks are picking up on the topic. You can see it by the amount of white papers that the big five are writing, like the Deloitte, EYs, and Boston Consulting Group. So once you understand that they are busy writing white papers on tokenization, then you know the banks are responding. The funds are responding. Now the regulation has to follow. And it's always a little bit of a chicken and the egg situation. So if we think of back in the day, 2012, when Bitcoin came out, the demand for Bitcoin was low, but the supply was high. And we are finding ourselves exactly in that same situation at the moment. Real world tokenization, the topic itself, and the actual product delivery of it, and the software technology of it is accelerating. So the regulation will follow. So I feel that once we have a look at the actual challenges that faces the regulation at the moment, it would be very practical ones like if I tokenize an asset and I use a Web2 digital native currency in order to fulfill the acquisition of my share of the asset itself, it will become borderless. So how do I, from a geographical perspective, manage that cross-border transaction? How do I manage the capital gain on it? I.e., do I know what assets my citizen is owning in which geography? I wouldn't. So I need to sort of clamp down on that. What does that look like? And the most real one would be, how does data get processed at the moment? Is data leaving the geography itself? Is it going cross-border or not? So those are the real barrier to entry ones that I feel from a regulatory perspective could become a very interesting topic if the regulators don't work it out. Because if you think of Web 2, the crypto space, regulations has accelerated this year. And it's got everything to do with the fact that, you know, every time Donald Trump does a tweet about cryptocurrency, it literally accelerates the trading of the asset itself. Therefore, you'll now notice that one act after the other is being spoken about, white papers are being published. Soon, tokenization will follow as well. That is my very long take on it. Of course, it's a lot more intimate than that. Um, But that would be my view. That's my very high level take on it. Yeah.
Understood. Understood. Absolutely. And I think with the emergence of different, regulatory clarity, it might take a different direction in the future. Who knows? But as you rightly said, regulations are going to follow. No one can judge how it will turn out. But the current innovation, that's amazing for us to uh, implement in a lot of good places. And one thing
I've,
that keeps on, sorry.
sorry, I've got a lot of faith in the banking environment. I've got a lot of faith in financial institutions. They do sit on the boards as well. They do speak to the regulators, and they are quite innovative as well. Even though we see brick and mortar inside of those banks, let's look at JP Morgan Chase. 20, 2023 employed 300 people to work on their tokenization projects, right? It's on the mend already. It's definitely in authoring. I think it's just how do they shape it? What are the key points for them to address? And that's where my view is the cross-border topic becomes quite an interesting one, because that's where, I mean, what does your citizens own, right? And how do you tax them on it? That's what it will basically boil down to.
Absolutely. I'm glad you took that example. I have Kinex's tab opened in my laptop right now. I was reading about it just today, that JP Morgan has this platform Kinexus, which is, the title says Next Generation Financial Instrument, that is launching its own JP Morgan Deposit Token, JPMT, to facilitate all the tokenization and alternative to stablecoin for native cash settlement. So finance institutions can see this revolution, right? But how the other asset classes and different regulators see that's going, and in most cases you are right, they follow the financial institutes only. What the financial institutes set in motion, that's what the world follow, because that's everything follows the money. Right? So
Everything. I like that.
but again, one can be hopeful. Since we are in India, we have not seen a lot of regulations there. That's why it's a bit touchy topic for me. One can imagine.
I'm
But
based in Europe, so you can imagine it's that's the first topic is regulation, right? You know, Europe, we tend to regulate quite heavily over here.
and so while we are on that topic, so what are the advantages that come with building an RWA focused Web3 business for Europe, Africa, or Dubai? You have mentioned all these three examples, right? You are in Europe, you have seen regulations turning out there. Africa, you mentioned, as a very good ecosystem that's taking up this industry forward. And Dubai, definitely, we see news every now and then. So, what are the advantages that come when building in these regions?
If I think of Europe, definitely regulation, right? So your adoption is a lot quicker. Under the MiCA regulation, even though tokenization is not that widely covered, it does have a very strong framework for what is and what is not. So you can really triage your legal and your product against that. From a US perspective, definitely there's an acceleration happening there, right? They've already tokenized the US stock bond now. So, from that perspective, you can see how that government is accelerating towards um, fulfilling treasury liquidity through retail funding and investor funding. So, it's very different, right? So, in Europe, you have a strong regulation. The US is definitely catching up. But my most favorite region, definitely by far, would be the UAE. I mean, they have definitely sent a message to say we are open for business. And they have a very strict regulation under the VARA licensing protocols and with regards to the CBUAE. But for sure, the acceleration is there. They just have an ability to make decisions a lot quicker than America and Europe. And from that perspective, those, yeah, for me that's my favorite, favorite region when it comes to the adoption from a regulatory perspective, because I think they see the real value in the short-term opportunity cost in getting quicker time to markets for their actual institutions, because that's such a big property market, but then also a quicker time to revenue even for the government itself. So that would be my personal take on it if I had to speak about regulations and the complexity of it as well.
Amazing. And so, apart from that, there is one, key element that we haven't touched upon in this chart till now. I want to go a bit off topic since it became too centered on tokenization till now. We have seen a lot of people shifting their platforms now towards AI, making them AI native, right? Even the custom blockchains that were there, now the custom blockchains have changed their, I'll say, tagline to "We support data for the AI layer," right? So where does AI add the most business value in a typical Web3 build today, right? In typical tokenization use cases today.
100%, you can't ignore the AI topic. It's a powerful one at the moment, together with stable coins. I mean, like yourself, if I open up LinkedIn in the morning, those are my top two white papers I see that gets published. If I think of where AI really adds the most business value in Web3 today, it typically would sit for me in fraud detection. It will definitely sit in predictive liquidity and then also user matching. Right now, AI adds the most business value, definitely for me, in fraud detection. And I'll tell you why, because Web3 is a little bit of a wild, wild west situation at the moment. And this has got everything to do with that boundary list that we've been spoken about, right? So you have some scams, you have wallet thefts, you have attacks. On the actual address components of it itself. You've got some good companies out there like Chain Analysis and so on that does the actual transaction monitoring. But where AI really makes a big difference in the fraud topic for myself is that you can use the AI agent to build complex models around where the fraud occurs. If we use France as an example, in France, you can work with the French Public Bureau to narrow down your fraud hotspots because they actually do have them. And you can pinpoint, and as an example, as that transaction comes in, your AI agent can have a look at what is the geographical um, pinpoint for the sending of the transaction. Is it in a fraud hotspot? Is it at a known fraud address? So that really brings a speed to fraud detection, and in that can be handed over to a human agent to then actually fulfill the investigative function of the suspicious activity itself, and then do, a bit of quantification there. The second one would be the AI can also obviously match user to wallet. So what you can then have another value add there would to spot anomalies in the actual transaction itself, right? So you can flag the suspicious activities itself because you've already trained the model on what to look out for, and therefore there's that quicker action. And then lastly, with regards to predictive liquidity, this is where you can catch up very quickly and efficiently with DeFi and tokenized asset markets. So build the model again to understand DeFi markets, to understand traditional financial markets, to understand the anticipation of flow and how the capital efficiency of that will actually work together with the trading of itself. So that could be that for me is a massive value add where AI makes a big difference. And then of course, when it gets to the actual UX part of it as well, AI plays a major role in like just creating a seamless UX experience as well. That's a topic I'm sure we'll cover on as well, but that is where you see that immediately return on investment around the security aspect of it, the risk tooling that sits underneath the actual technology itself, because during the user onboarding flow, that's where you check fraud. That's where you check who am I doing business with. Am I allowed to do business with this person? So with complex modeling inside of the artificial intelligent agent, you take it through that journey.
That's an interesting thought process because I've seen people, not just people, but biggest companies who have just raised millions of dollars. They spend most of it in trying to make the user experience as seamless as possible. They spend hundreds of thousands of dollars on branding, best logo, best slogan of the world, best event in the world, and best after party and all of that, best. But eventually, the actual UX part, no one comes, covers in. And what you said, it makes a lot of sense that if we integrate AI with the new models of tokenization of assets that we are building, the user onboarding becomes much easier. People don't have to differentiate between the old economy and the new economy that you mentioned before, right? They just
Exactly.
have to use. And so, what are that other elements you would like to point out to inform the audience about? What other elements of UX are there that can be simplified in this regards?
Yes, 100%. Simplicity in UX is a non negotiable. We are all digital native users now, right? So this thing is in our hands 24/7. I want to use my phone to do everything. I want to be able to make transactions. I want to pay people. I want to do investments. I want to do everything while I'm actually walking on the streets. What I don't want to do is go into a branch. I generally do not want to log into a web application. So when I look at a platform, the first thing that catches my mind is the UX flow. The biggest barrier to drop off in UX is in the onboarding itself. So, am I understanding what the company wants from me in order for me to do business with them? That's where the simplicity comes in. Again, the AI model, you train it, and the large language model will then help you get through that process, right? But if you understand that mainstream users shouldn't need to understand the wallets, the gas fees, your seed phrases, your stock profiles. If you understand that you can actually make that available in a UX, that is extremely, extremely valuable when you speak to your retail customer through the actual application itself. Then, you can have a look at some other things, which is really important when you create a clear value proposition with the UX, is the actual flow itself. We know that we want to buy, hold, and sell, right? We know that we want to stake and all of that. But are we communicating to the customer through the UX itself? Are we pulling them deeper into the technology, into the asset? Are we making them want to buy more? And how you make them want to buy more is through the UX itself, through the communication, the alerting, the promotion. So from a UX perspective, I feel that if I open up my application on my phone and everything is there, everything that I need to make a decision point on, I'm signing up to that brokerage, or I'll sign up to that application itself. It's once I start having to like scratch my head going, oh, like, I'm not really understanding what's going on here, then I'm like, no, I'm out.
No, absolutely. It reminds me of one experience I recently had just last month. I went to some event, and to enter the event, I had to download their crypto wallet and create a new account on the crypto wallet. Then, download that seed phrase and then copy it again and showcase I remember the seed phrase. I didn't. I'm a crypto native user. I'm a blockchain user. I didn't do that. Why would a normal user do that, right? And at the same time, if they're asking for a social login, just just for a small cupcake that I have to buy on a shop, I'll just sign in with my Google right away. I know it's going to be easier, right? So definitely couldn't agree more on that part. And this is where we come to this, major point that there is a difference between the old economy and the new economy that's there, and that needs to be binded together. So, in your view, is the parity finally closing between the old economy and the new economy?
Yeah, I think the parity is definitely changing, and I'll tell you why. Um, it's generational to begin with. Our new generation, they are different. They think about life differently. They understand. First of all, they know how to use a computer. They understand how financial markets work. Like I've mentioned earlier on in the podcast, right? You have ChatGPT, you've got YouTube, you've got Google, you have your friends, you have your communities, you've got Reddit. Those are all financial universities at the moment. What you need to do is just tap into it. It is for free. It's not like when, and I don't want to give my age away, right? So, but it's not like when I had to go study to become a banker. And then I had to study a book this thick just to make me understand how an economy works. So, how the parity actually does get closed down is we all should understand how inflation works. We should understand how GDP works. We should understand how assets and bonds work. But the parity for me and the closure of it really sits in the fact that banks are realizing that there is 600 trillion US dollars of assets that's sitting off the chain, right? They get broken down, and I'm going to be very sequential. They get broken down into four categories. You have stocks, you have bonds, you have currency, and you've got commodity. The new economy understands that I've got access to either one of those. The old economy still thinks if money goes into my bank account, it gets debited. If money goes out of my bank account, it gets credited,
Yeah,
right? Your
yeah.
new economy goes, man, I just need to be able to know how to read a stock sheet. I need to know how to tap into a tokenized asset, and I can be part of either one of those four blocks. And that is how they're closing it at the moment. You have financial institutions like BlackRock, JP Morgan Chase, or whoever out there, that they get it. Even though their CEOs are highly anti Bitcoin and so on, but behind the psychology of it, they are understanding their new market. And their new market are not necessarily the people that's sitting on their books from the age of 7 years old. So that's how I believe, from an evolution perspective, the train is definitely on the go. Assets are being tokenized, they have real economic value, they have intrinsic value, they've brought truth to ownership to the end user. And just based on those three things, I think the decisioning point is easier for the retail client and for the institutional client, but the gap is closing, and there is no turning back. I don't think there is any turning back now.
Absolutely, absolutely not. No turning back from here. Till now, we have just experienced the financial markets, and now crypto and tokenized assets are giving us secondary market, tertiary market, and the market beyond that. You know, a single asset can go so long. You are practically your own bank these days in some cases. I've seen that slogan as well in a lot of places, but I definitely understand what you meant. So, while we are on this topic, uh, the current ecosystem has shifted its focus from tokenized asset towards something that's buzzing all around the world, which I believe to be the biggest use case of tokenized asset. That's stablecoin, right? The U.S. government legalizing stablecoins, like passing act for that. The Hong Kong government, all governments around the world are now considering how to enable stablecoin, integrate stablecoin in the ecosystem. So my question to you is, Jackie, what's the role of stablecoins and tokenized fiat in this ecosystem that we just talked about?
Stablecoins are the new fiat, if you think about it. And they are what they say they are. They're stable. They have very low reaction to volatility. Um, they definitely will become probably your next digital currency. I mean, if you think of Bitcoin and ETH as an example, let's use Bitcoin. Bitcoin falls into that commodity bucket. It's like gold, right? Um, when it dances, it goes really up or it goes down. But a stable coin has got a real intrinsic value that it can, as an example, make payments available. Let's use XRP as an example. Okay, so it's a very good, very well-known use case, and stablecoins are really nicely backed on it as well, because it is the blueprint of what a good stablecoin should look like. So if you think of their use case, right? So they're saying, listen, we will make cross-border payments available to you, and the first topic that we will touch and that we will create a revolution on and innovate would be the settlements topic. So it's almost near real-time settlement. So if you think of a stable coin, the first thing that it will disrupt is your settlement processing, because it is near real time. It's not like, Harman, I'm sending you currency from Europe to India. We have to wait T plus one or T plus two in order for those funds to clear and in order for you to get them and it made available to you. I can simply send you an XRP, a USDC, or as an example, if I was in Dubai, I can send you an AED. So from that perspective, it becomes a real digital currency. It won't replace fiat. There will always be a home for fiat in the ecosystem itself, but it definitely will take a big chunk of it away from its actual value proposition. And that's where stablecoins really become interesting at the moment, because you're going to have a choice. I'm either going to send you money out of my fiat wallet and I'm going to use Swift or MoneyGram or whatever that is from a remittance perspective, or I'm simply going to transfer you a digital asset stablecoin. You're going to be able to use it immediately. If you have a wallet linked to your bank account, if you've got a card linked to your wallet, you can simply go and tap transaction has been made. So that is the real value proposition of a stablecoin at the moment.
Amazing. And you know, the example that you shared, the tap and pay, I think that has been a biggest factor in terms of even deeper adoption worldwide. I don't know if you know, in Google Pay in India or UPI in India, UPI becoming the biggest digital transaction payment system in India, biggest in the world. It has reached so much of population that even the biggest concern of reaching the underbanked population has now been eliminated with that. And many people believe that stable coins will even further that cause. They will reach to those corners of the world that who choose not to be on a digital platform because they don't trust it, right? But it has not been able to do so till now. So, what are the barriers to adoption in those underbanked regions?
Yeah, the underbanked regions have got real. There's one or two barriers to entry in the underbanked markets, right? And when we speak to underbanked markets, we generally touch on emerging markets. So you've got some real impact areas such as the rural areas. So there we typically look at infrastructure issues such as, do I have access to the internet? Do I have the right smartphone? Um, and do I have actual connectivity in order to perform the transaction and to be part of this digital world that's out there? So that could be the real first barrier to entry. The second barrier to entry definitely is education. Am I understanding what I'm doing? Am I trusting this new digital world? This new digital world. I'm only accustomed to currency. I don't even want to use Apple Pay because I'm not trusting it. And it's not because it doesn't work, it's just because I'm not getting it. So education is a major topic on that front. Then the third one that I would definitely lean into is a trust issue. And I know this because I deal with a lot of people that, as an example, would say, yeah, but the bank has been around for 100 years. I've known them since I've been a child. My mom and dad used to bank at that bank. I don't trust this new situation. So, from that perspective, it's also that psychological trust effect that you have to migrate into. Life is shifting and it is evolving. Look at what email did to the post office in the 1990s. It's that same psychology, but it will take a little bit of time. So, from that perspective, those would be my top three industry barriers that I would look at. So, if I had to, as an example, consult or give a lecture at a university, I would say, guys, focus on those three things. If you can solve those three things by talking, as an example, if I was in Africa to an MTN or to a Vodafone and say, listen, how do we partner to do this? Then that is something that I would do from my perspective. Those would be the three things that I would look at the underbanked sector.
Absolutely. I think one particular area that you touched here, the education part, that's not just for the underbanked, but more universal, right? That's something that we are witnessing even in the most advanced civilizations as well. Just that education is something that's missing, and it plays a crucial role in terms of global adoption, right? So, yes, you're about to say.
Yeah, I agree with you. Education. There's a few things around education, right? There's tertiary education and there's education at home. So education at home is a little bit difficult in the situation of because the generation that is performing the education is still educated by the old generation. I give you a real life example, right? So my mom and dad taught me how debits and credits work, especially my mother. So she would explain, and I've said this before in the podcast, money comes in, it debits the bank account. Money leaves, it credits the bank account. So you need to make sure that you do less credits than debits. Then I became a banker. Then I started realizing that if I invest my money and I leave it there for a long period of time, sure, it's going to grow with interest. The interest will compound and eventually, hopefully, I make that million. Get it? But now I'm looking at cryptocurrencies and I'm going, gosh, if I diversify a little bit into cryptocurrency, then the growth is even more exponential, right? So again, my realm has opened. When it comes to tokenization, as an example, the education changes completely because here you are touching on understanding the ownership of what it is that you are purchasing into or investing into, the value and the access. And that is completely different because I'm not buying the building myself. I get handed the keys and then I go and enter the building. What I'm buying is a fractional ownership of it. So there's a whole educational process around what does that look like. That's the retail part. From an investor perspective, you want to understand, okay, what am I investing into? Where does my liquidity go? How do I earn against that yield? What does that yield function look like? How does the distribution model look like? So there's that education. That's that part, right? That's the most complex part. the part that really excites me and where the real opportunity sits at the moment, and I think this is also what you mentioned earlier on around your podcast, is how do we get the topic of blockchain, tokenization, digital assets, investments of such into the university level, even into your high school level. Instead of having basic accounting, why don't you start looking at what does the new economy look like? What are you preparing yourself for? How do you become a niche, or how do you become one of those human beings that really understands it and really has that opportunity to say, listen, yeah, I have a degree in blockchain. I'm super proud of it because it enables me to understand decentralization. I understand transparency. I understand what my career path looks like. I'm either going to work for a big broker, or I'm going to work for a blockchain organization. I'm going to really love it, or I'm going to start something and I'm going to go down that path.
Absolutely. One thing that you mentioned in a previous couple of questions, that it's similar to how the internet shifted the post office era. In some senses, this shift is much more deeper, as you mentioned in this current question, that you're not just replacing the way that you are doing email or mail system, you're replacing the whole structure of the mail itself. The fundamental shift is there. That's why it's a bit difficult to understand for people these days. It's a big change from a fundamental point of view, and that's where most innovation and opportunity also lies for the world to become better, right? But really amazing to hear these kind of thoughts and question the fundamentals of the world that we live in. But I know I've already taken a lot of your time. I just have a couple more questions, and then I'll let you go. My most favorite question in all the podcasts that I do is, which asset you hope or are you witnessing that will be tokenized soon, and it's going to be the biggest thing in tokenization in the coming years?
I'm a property fan. I'm gonna go with property. I really am. As a youngster, the first thing that was said is like, you need to get onto the property ladder.
Yes.
Second thing, I was like, but how? I don't have that kind of money. I don't have all that money to put down as a deposit and so on. It definitely is property. I really believe that. It is the single most accessible real world asset that the banks itself will be willing to go into a tokenization program and to make that available as an actual product. It's worth it for them. They already have the mortgage books, they have the underwriting books, so they can. That's the thing that I feel that they will target first. That is where the immediate quick time to market sits. So for me, I'm going to go with property for sure.
Amazing. No, I think that's the maybe the biggest reason why we are seeing so many of property use cases first in tokenization. With Dubai, with so many properties in UK, and now in India also, there is the first property has been tokenized in Gift City, Gujarat. So it's happening all around the world, and we are witnessing more and more innovation in that space.
Close second for me, retail credit. I had to shout it out. Sorry. Close second, retail credit. Definitely.
For how about retail credit in property?
Let's do both.
So there is one company in UK. The person I interviewed last month, they were doing private credit in real estate. That you can fund the builder who is trying to take a loan from bank to build his to construct the building. So you can fund that construction and be the first check-in when the building is being constructed. So I think that's a good synergy of both your favorites.
Isn't that fantastic? Because that brings us not just with retail credit, then that also brings us into project funding. So that could be super interesting. I mean, even if you want to self fund the actual property and the building of such or the project, super interesting. That is a topic on its own, I tell you.
Absolutely, and it's the safest place for an investor to be at, right? Because you are getting in at the right time. It's like you are becoming a VC in a startup ecosystem.
100%.
Amazing. So finally, Jackie, I have some rapid fire questions, fast answers that I know that the audience loves, and will get the maximum information for them for this particular interest areas. The first one that I always ask is, what is the most overhyped term in Web3 according to you right now?
Decentralization.
Overhyped. Wow.
Overhyped. It's not because it's not important,
Yeah.
okay? It just gets thrown around like like the silver bullet. It really does. Every white paper you read, or every human being that you listen to at some talk, they will really talk about the decentralization of it, and I understand it. I really do. But a lot of decentralized projects still are heavily relied on the actual centralized infrastructure of it on its own and the governance of it as well. So it gets thrown around quite a bit. That would be my one. That's the one that always seems to stand out for me. When I hear the word, I'm like, okay, here we go.
Yeah, it has more to be like a, decentralization is a de facto kind of thing. It's a given. It's an inherent property. You just don't have to throw it around, right?
Exactly.
It's the whole basis of what you are doing. But anyway, so I got the idea.
Yes, you do.
So the next is, what is that one book or one podcast or one educational resource that you would recommend for someone to understand how RWA tokenization works?
Yeah, that's a very good question. I'm happy that you answered it. I've got a sort of a dual answer there, right? And I've mentioned it before. You have ChatGTP, YouTube, you have Google, and you have white papers. Lean into those. They really are super important, and start triangulating your formulation of understanding of the actual industry itself. And then from a book perspective, I'm reading two books at the moment. I like to read one business book, one non-business book. The business book that I would probably lean into if I had to wanted to understand the tokenization topic a little bit better is on a broader spectrum called Build for People. So what that really leans toward is a low carbon building model. Because we are going into blockchain and um, digital asseting and the tokenization of properties, we should never lose sight that ESG is a topic on its own, and that we should have a healthy, carbon footprint. So, what does that actually look like? If we run these big mining machines, there needs to be infrastructure for that. That infrastructure consumes electricity, so that's always very important, and that is something that I do take out of this book at the moment. And then I am reading another one that is a lighter read, but it's super interesting, if you want to have a look at it, and that is how to be it's called Becoming Supernatural by Joe
Okay.
Dispenza. That's a super interesting book in the sense of it just talks to you as a human being. The basic stuff about being a human being, and what does that actually look like? How do you unlock your thought process? What do you allow in versus not? So those are the literature that I would um,
So
mm,
I guess they are more hinting towards the point that you made earlier, challenging the status quo or challenging the fundamental concepts that you have. When you read about them, when you understand them, what are the fundamentals behind the fundamentals, then you'll be able to understand how
exactly.
the things progress.
And also, what drives you as a human being, right?
Yes.
We're all ambitious. We wanna achieve some stuff, but I do believe that with the success, we have to also give back, and that for me is very important in the greater schemes of things.
Perfect. So my last question. By the way, I can't believe the hours passed by so fast.
Yeah.
It was an insightful conversation, but I do have one last question. I've got some amazing answers of this question from a lot of people. Someone said Eiffel Tower. Someone said the trees in Africa. So, what is the dream asset that you would want to tokenize next?
The real asset.
A dream asset, something that you feel
Oh,
like,
a dream
okay.
asset. Okay, okay. I have one for you. I'm a massive Tour de France fan.
Okay.
I'm sad that my guy didn't win this year. But if you follow the Tour de France really closely, money really is making a big difference. So you have three very big teams, and those big teams dominate the entire tour, right? Because they have funding. So if I had to tokenize something, a dream of mine, it would be to tokenize the actual team. Like create a tokenized Tour de France team with fractional ownership, put liquidity into that. I will create like an exclusive fan token setup so that the fans can win tokens based on the stage performance. Like put some gamification behind it, and then create like collectible or mint collectibles. Um, for those historic race moments, but really generated a hype around it because at the end of the day, if you're really into it, I mean, why didn't you want to be a part of it? Because that would be something I would do immediately. I would sit on that couch as my guy is cycling and I would be definitely investing. And I think that is the psychology behind any trader or anyone who is passionate about the community that they're part of.
Absolutely, absolutely. Amazing dream asset. I hope that definitely gets tokenized someday, and it gives people access to uh, the team that they so wish to be a part of as well. It's I am sure a dream of many people to have an ownership of the team and contribute towards the growth of that team. But
I mean, I'm
amazing.
just thinking because I'm South African, right? If they can tokenize your cricket team and they can tokenize my cricket team, that could be very interesting.
Absolutely. There are some projects I recently saw who are trying to do that. Maybe they end up doing it, and I'll definitely share with you first.
Please.
Amazing. But Jackie, thank you so much for your time today. It was an amazing, lovely discussion. I got so many good insights. It built my knowledge base a lot better than it was before this podcast. I'm sure the audience loved it as well, and will try to cover as much topics as we can in the next podcast with you.
Haman, really, thank you very much. Thank you for having me. I really had an amazing time. I enjoyed the topics. I thought it was so organic. For me, it's all the fundamentals that we should understand from a tokenization perspective. I enjoy your podcast. Thank you for having me.
Have a nice day, Jackie.
Have a nice day. Bye.